Hello and welcome to the VentureForth podcast. I'm your host, Joe Mahavutivani. We'll be chatting with some of the most interesting founders, startups, and VCs about the experiences that led them to where they are today, what they're currently working on, as well as the journey ahead of them. Before we get started, I'd like to apologize for the sound quality of today's episode. We were trying a new call recording method that didn't quite work out perfectly, but promise that future episodes will be much better. And without further ado, here's Howard.
On the show today, we've got Howard Lindzon, co-founder and general partner of the early-stage seed fund Social Leverage, and founder and chairman of StockTwits, the real-time financial communications platform for the financial and investing community. He's got a massive following on Twitter and shares everything from his favorite trade ideas to root canal selfies. As an analyst with Social Leverage, I've had the pleasure of working with Howard for nearly 2 years now, and I'm very excited to have him on the VentureForth podcast. Thank you for being here.
Hey, Joe. Great to talk to you. I'm trying to replace what you look like, because it's been so long since I wanted to hang out with you. Okay, now I remember. Okay, Joe, that Joe. For everybody listening, first of all, Joe, whatever his last name is, it's the hardest name in America to spell. So many consonants, and Donald Trump should take care of you when he's elected president. Joe is got the patience of Job, puts up with all the nonsense at Social Leverage, which is, pranks, yelling, last-minute details. So it's a thrill to be here. You are the man, and you threw one hell of a Stocktoberfest.
I appreciate that. We'll get into that in a little bit, actually, about Stocktoberfest.
I only said that for my wife, who's standing right behind me.
Hi, Ellen. Howard, can you tell us a little about your journey to this point and how you became the Howard Lindzon that we know and love today?
There were 6 or 7 operations. The 5th one is when the skin graft started to take. I was born in Toronto, so that's where I get my wicked, cunning sense of humor, and moved to Arizona to go to Arizona State. I ran away from home. First took a lot of money from my parents, like Donald Trump, and then I got early in on illegal aliens in Mexico and built an empire. In Phoenix. And so now I have a team of thousands and thousands of illegal people coding for me in a sweatshop in Tempe, and we've started hundreds of companies. Oh, wait a minute, this is the wrong show. I think I'm talking for. What was the question again?
I can't wait to see the emails and letters that come in about this podcast. But
all right, you know what? I could only do this with you, Joe, so that will be my last goofy answer. So let's keep it going. I will promise to be on point now.
Oh, totally. No, this is going in.
It has to go in. So, this is the real Howard.
Definitely. And so one thing that you're known for, both on and offline, as we've just seen, is your sense of humor. Can you share how you developed that?
Yeah, I think I was left alone a lot, now that I think about it, and in a dark room. No, I think I had a TV when I was maybe 11, so I was kind of spoiled. And, where you had a click, there was like 12 channels, and if you went past the channel, you had to go all the way around again. This is, I'm not a millennial like you, Joe. So it would take 45 minutes to get back to the channel because you had to go through all the channels. And I also wore a patch as a kid, so of course I was getting abused at school. So you had to have a sense of humor because I had this floating eye. And my mom dressed me in knickers and high socks. So it was really a tough childhood. And I remember at night, because I had to wear this patch like 24/7, and they would put the patch on your good eye. It was like torture because I could only see out of my back. And so not only did I have a TV, it all looked fuzzy to me, but Johnny Carson I would stay up late and watch Johnny Carson. He would the guests and him would just make me it was just hysterical. It was like something that it was like as a young kid, I probably was the youngest kid ever watching that show. It just blew my mind how everybody seemed to just goof off and in real time and have a great time on that show. And, he used to have all these great comedians come on, like Gary Shandling. I remember watching with my dad Gary Shandling the very first time. I just remember where I was watching with my dad. And my dad was cracking up, and I was cracking up, and he was just telling, Jewish dad jokes. And I don't know if I picked up on it or if I was just inspired by it or I had that gene that allows me to look at the world upside down. But I did a lot of comedy as a kid at Yuck Yucks in Toronto, not well. And so I've carried that twisted look at the world, and it's really helped me. And people seem to like it. So, occasionally I cross the boundaries, but you put stuff out there, and now there's all these social tools to put that stuff out there, and so the platforms exist that people seem to stick to my shtick, and it's definitely been a differentiator in terms of in the business that I'm in.
Toronto produced a lot of great comedians. Can you name some of the contemporaries that you might have worked with?
At Yuck Yucks there was just hundreds, and I remember watching. Well, the problem with comedy too is people don't understand how it's kind of like a founder or an entrepreneur. You go up on stage and you're just naked, and just the world is there to pick at your ideas, and you have to get the timing right, and you have to have the ideas, and you have to have the crowd. It's very much like a founder, if not harder, because you really have no team. You're alone. I mean, if you have a guitar or you can juggle, I guess you have a kind of like having a team. You have a prop. But I never had that. It's just me and my mic. And I remember sneaking into, he was too young to get into Yuck Yucks, but watching Jim Carrey at local, bars that would have him. He was famous in Toronto already at 14 and 13 doing Muppet impressions and contortions. And because, at 11, like I said, I was into comedy, so I was just, in the newspaper in Toronto, just figuring out where all this stuff was. And then probably the best was Jim. And then when I actually started doing comedy at Yuck Yucks, I was about 17 or 18 at like amateur nights. I remember seeing, I'm having a brain fart, but Shrek. What's his name?
Mike Myers.
Oh, yeah, Mike Myers. And he was like my age, maybe a year older. And he just so much talent. I mean, raw comedy, like the voices from his world, not so much Muppet world, like real people from his family, and he just slayed. Like he just didn't know who he was, but you couldn't. You just once you saw him famous years later, you're like, oh my God, you knew that guy was going to be famous. And then there was a lot of Second City. I grew up watching John Candy and Eugene Levy, who was just hysterical. So Toronto had all the great comics and Second City television in my formative years, and that's the kind of stuff that stuck with me. So I met them all. That was Toronto. It was just one of those cities that had great comics.
When you realized that comedy wasn't going to be your full-time calling, what became your big break after that?
Well, I'm going to count this as my big break. I'm 51, and I hope my career goes on another plane after this podcast. Oh, that was a shameless plug. So hang on. There's no big break. I mean, the big break came. You make your own big break, so there's no such thing as a big break. I thought I was going to get my big break because maybe I thought I was going to be a comic when I was like 6 months into doing. It wasn't very good, but I was 6 months into doing amateur nights at Yuck Yucks in Toronto, and not really enjoying it and not really good. And I think they were having a best of. Yuck Yucks was famous, so some guy from LA was flying in, and I think like 3 people died. So I was like 18th on the list. I bumped up to like 15th, and I got to be in this like best of Toronto night. And I think I went on 3rd ahead of a guy that crushed it. And I mean, I bombed. I mean, and my mom booed. My sisters were booing. It was so bad. I think I peed in my pants. And the next 10 or 11 comics all became famous. Like, they just made fun of me. The next 10 or 11 comics changed their routines to make fun of me and all went on to stardom. So I think I was the only guy that didn't make it. And I launched a lot of careers probably So that was the low point. I think that the big break was when I searched the term sheet in 2005, and I got Fred Wilson and Brad Feld's blogs, learned about term sheets, wrote a term sheet for golfnow.com, which is a company in Phoenix, and that went on to be a great exit, and that's when I definitely went full in on angel investing. So probably 2005 was the big break. But, you know, you make your break. I had seen this golf deal, wanted to do it, figured out I wasn't an investor per se in private companies. I was running a hedge fund and wanted to learn how to do angel investing, and the web and Google search kind of changed my life.
Well, what was the biggest deal that you missed out on?
This week or ever?
Let's go with ever.
Because this week there was a killer sale at Nordstrom, and I was in Florida. So ever. Well, I mean, dollar-wise, Twitter, back-to-back Twitter Zynga within 6 months. So pretty genius calls that I made. And then, I mean, how do you top that? I'm hoping that I can't top that ever in 3 lifetimes.
All right, so you mentioned Twitter, and you were also the founder of StockTwits. So what led to the creation of StockTwits, and what problems were you trying to solve?
We don't know. We'd like to plead the fifth on that, Joe. We agreed not to talk about that. I was trying to make money. That's always a problem I'm trying to solve. Of the unsuspecting public. So the markets work, Joe. God, I always have to tell you this. So, no, the problem I was trying to solve was I had been shown Twitter, Andy Swan, Fred Wilson were like bugging me. They thought I'd be great on it. And I started, and I was talking about all the places I was peeing. It was like Foursquare for peeing was my original idea, where you can map out my bladder to see if I could efficiently know ahead of time where to stop to go to the bathroom. And honestly, that was the game, and it was stupid, and I was using my BlackBerry to tweet. And a lot of people liked it for some stupid reason, and I got bored with it quickly. You know, I was like, why don't I start talking about stocks that I'm buying? Just kind of like BlackBerry had the pin, and that became huge amongst brokers. So I just started doing it, and Soren, who was a financial hacker kid, coder at the time, was in my stream, and I was like, why isn't there a Twitter for finance? You know, twitter.finance.com. And Soren responded to it and said, oh, we could build that. And that was how it started. I think the key thing was the cash tag. We didn't call it the cash tag at the time. Probably, I think Chris Corvo. And I used to go back and forth, and Chris, who was the original CTO, was like, we got to name it something. But more importantly, I had this idea where Soren, myself, and Chris were sitting around. We were trying to figure out how to curate, you know, the Apple. Like, do I like green apples, or am I at the store buying an Apple phone or iPod back in the day? And that's where we came up with the $. And then it was just, you know, we were the first guys doing it. I would tweet at Fred, hey, I'm buying some $RIMM. Fred thought it was genius and a great idea. And I assumed Twitter would have just adopted it. I wouldn't have to build a business. But they weren't interested in this whole verticalization. So we went and started StockTwits. That's how it started. Probably beginning of 2009, we finished the first website.
And how's that cash tag court case with Twitter been going?
We'll win. We'll probably win $1 billion. You know, I think at the time, you know, we talked to the lawyers about it, and it was like just like the hashtag. They were like, maybe my lawyers were wrong because they're always wrong, but we just didn't want to spend money worrying about, you know, adoption was what mattered, not who owns what and trademarks. So we weren't thinking about, we didn't think we could get any kind of trademark / patent off of it. Stuff tagging, you know, for QSIPs and stuff had been around forever, and it was just a community type thing, and that was the least of our problems in trying to build a business back then. So we just never did anything around the $. We just gave it away.
And this is a slight detour, but if you were the CEO of Twitter, how would you fix it?
Well, I wouldn't want to be the CEO. I think it needs a turnaround CEO at many levels. I think they need to shrink. I think they need to do a reset. I think if they announce 10, 20% workforce cuts and a focus on a couple verticals, I don't even think the stock would drop. So I think they have to come to Jesus and pick something kind of like the board game Risk. You know, they've boiled the earth, but it's not working. And now they need to retrench and figure out what's core to the platform. Right now, they've attacked the world. The world, like we're seeing in real life, is full of hate right now, and democracy challenge in many democratic countries are slipping. And you're seeing that play out on Twitter as well, with just the hate. So, you know, they're being valued, they're undervalued, for sure, in a world that Facebook's valued at where they're at. But the market's not completely stupid in that the market is voting and saying whether they're undervalued or not. You still have to have a plan to get it to be worth 25, 30 billion. You can't just hope. And the users are full of angst. The value prop is slipping each day from a global perspective. And NFL's cool, but that's not going to save the company. It's Thursday night games. So I believe they had some great ideas that they dropped too quickly, like e-commerce, especially around transactions. So, you know, for me, I would have early on focused on verticals. I would have early on focused on getting in the brokerage business, getting into the transaction business. Probably would have bought one of the fantasy sports companies and owned the transaction around gaming and taken on both the SEC and New York governor instead of their free speech stuff, which is never going to, it's not important, it doesn't matter. They're not the government. So I think those are the kind of policy mistakes they made and strategic mistakes they made. Maybe it would be worth less today, but if you look at the stock, like the key thing in looking at the stock is, you know, they're 12 billion now or 10 billion. They were at 12 billion 5 years ago. I think if they had really stuck to a plan, maybe they'd only be at 10 billion today, but they'd have a $50 billion opportunity around transactions in sports and finance and lead gen around just helping people get paid for their knowledge and their leads, whether it's a partnership with Amazon, just simple stuff. So I don't know how you change it now because I don't want to watch the NFL on my phone. I don't want to watch the debates. You know, I may want to watch 5 minutes of it. And for the company that's going to buy them, they're all over the place. So, you know, Salesforce can't buy them because what does Salesforce care about the NFL? And Apple doesn't need to buy them because it's a headache around media and around, you know, Tim Cook doesn't want to probably be bothered around things that were said in Iran when they're trying to ship phones there. So I definitely don't think, I mean, it'd be great if they did. I own a few shares of Twitter, but I don't think Apple buys them. So, you know, maybe a Twitter or Verizon or a Chinese telecom, but, you know, and that whole problem with China buying them is like the Del Coronado in Coronado, you know, the Treasury just blocked the Chinese from buying that asset. So, you know, Twitter needs to build the business themselves. So it just feels like they need to retrench first and then come from a stronger base. That was a long answer.
Moving on from stock investing to startup investing, you were considered one of the early super angels. Why did you decide to go from being an angel investor to creating a fund with social leverage?
You know, you get tired. We were doing single-purpose vehicles. We had also set up a kind of a studio format, Tom and I, with Social Leverage LLC. So we raised money to run it as a company, like a mini holding company. And, you know, what happened with our holding company in 2007, 2008 was we made a bunch of investments with the first money we raised, and the companies took off, Buddy Media, TweetDeck, StockTwits, Ticketfly, eToro. And so what we didn't understand is how to price all these things and raise the next round. It was complicated. Structurally, I think we chose the wrong vehicle, although that company is going to be amazing over 20, 30 years. It is a holding company. And so it's just a complicated thing to run. BetaWorks does it. There's a lot of incubators around, and just didn't fit my eye once we were doing it for 2-3 years. So we continued to roll money and invest that and run that as a company. But the second time around, we decided to do it as a fund, 2011 or 12, I believe.
And how has your investing strategy changed over the years?
Well, I mean, we definitely, as an early angel, was like, I could make a decision in one meeting. And now that I'm over 50, and I've had great first meetings and great investments and really horrific outcomes from investing quickly. So I've seen everything. So I just prefer to spend more time and write bigger checks. And we definitely don't care about social proof. Social proof has never been something that's worked for me. I've been investing and trading for so long that I don't need other people to tell me what to do. I do like to hear other people invest in a certain area before. I'd like to trend follow, so I don't like to be the first guy to invest in a sector, but I definitely like to see some proof in the industry, but I don't care who's investing with me or against me. I've never bothered me, so I think that's made the step up easier. But that's how it's changed as well. It's like we're tired of 15 people in the initial cap table, so we decided to move up the cap table.
In Harry Stebbings' recent 20-minute VC podcast, you mentioned that price was something that prevented you from making investments in Twitter and Zynga. How does price factor into decisions today?
Not as much. We're cheap. I'm Canadian. It's genetic. Tom's Canadian as well, and Gary is actually Russian, but American. So we, as I've learned, if price is the absolute only reason you're not going to do something, then do it. When I looked at, but at the same time, we run a fund, and our LPs don't want us to do uncapped notes, nor do we, and our investors don't want us to do $100 million, A rounds. We're seed investors. I passed on DraftKings at $100 million because, I don't know, I thought it was going to be great, and I'm friends with the founders, but and I appreciated the opportunity, but it's like, I don't know how to, everything's great if it works out, but I don't like having to go to my LPs and say, I broke my rules, and we lost money. It's just professional, I believe, to just stick to a framework, whether you're trading your own money or other people's money, investing, same thing, is, you have some guidelines, you set them. The reason you can break rules, and sometimes you should break rules. But as a practice, I try not to. And especially, the early misses were like, it's my own money. I got to, I always stick to my rules. And because we were one and done back then, investing at a $2 million or investing at a $20 million is actually a huge difference. So, being wrong sucks, but, I've also made a lot of money selling and missing deals for those reasons too, based on price and party rounds. So I'm not saying it evens out. I think this boom was so big that it would have made sense to do all the overpriced deals in hindsight, but hindsight is just that.
Social Leverage is an investor in, at this stage, hundreds of companies. Which portfolio company are you most excited about?
I wouldn't say hundreds, but maybe 100. There's not one. Obviously, I spent so much time in financial services that I believe some kind of roll-up around, or just the investments that we have in Chart IQ, StockTwits, Robinhood, and a few other stealth ones, and potentially Civic around identity. Just reimagining how this millennial that we all make fun of spends the next 40 years of their life earning, saving, investing, trading, insuring themselves. I think we're at the dawn of some kind of crazy new boom, which could have a crash before it, or could, but, money, in a world where people are getting smarter, it should be interesting to see, trillion-dollar companies and who participates in those and how it happens and who makes money off these. So I think the financial sector is interesting. It's kind of overfunded, and so there's a pause here the last year that hopefully refreshes. And then, I don't know, marijuana is interesting to me on the product side, not on the growing it or real estate side. Fashology, not so much Internet of Things, but just fashion and technology and brands. and food. So there's a lot of new stuff that I'm reading about and getting interested in.
Definitely. We just wrapped up this Oktoberfest conference in Coronado, which is a favorite event amongst the finance community. Can you tell us a little bit about how the show started and came about, growing over the years, and why people should attend next year?
I think it came. Well, you're obviously trying to make a buck for StockTwits, and I believe the online world, or I believed a good online community deserves an offline place to connect. That's what StockTwits was all about, meetups and smart traders getting in a room. And so Oktoberfest was just an extension of that. Sean, who's been at StockTwits almost since the beginning, and runs community and curation and figuring out how to keep the community running in the right direction and clean. He came up with the idea for Oktoberfest, the name, and it was just a party in Coronado that celebrated all us goofballs that like to talk about the markets all the time, and now it's evolved into one of the I have to say, based on feedback, one of the really great off the beat path think tanks for people that just want to not necessarily just make money, but like find the right people. Like this whole investing for profit and joy. You got to make money. Why shouldn't you try and make money? And then I don't want to just make 6% a year. I want to make 80% a year, and that's not greedy. That just makes common sense. That if I'm going to work this hard, I want to make that kind of money. So how do I build a group of people that think like that? And we're not trying to get together to talk about the end of the world. We're trying to say, if the world ends, how do we make money? If the world ends, what's going to work when we come out of this? So it's a very positive kind of collegial environment, and it kind of works. And this year we're 400. I think we'd probably cap it at 500 just because of the island itself. But we're going to do some other events in New York and Chicago this year, a couple big events. That's
exciting. Yeah, it was a great show. I'm going to wrap up here with some quick-fire questions, a format that I borrowed from the 20-Minute VC and others. And so I'm going to ask you a question, and I would love to get the person that comes to your mind. What apps can't you live without?
Oof. Thought for a while it was Slack, off that mostly. I guess I would say WordPress just because I'm so ingrained in it, but I guess I could live without it. But, I mean, it is where I housed 11 years of writing. I would say, I don't think there's an app. I mean, Gmail, Google Maps, what do I use every day? I mean, obviously I love Uber. I could live without it, though. So I guess Gmail for now, and, news isn't important to me. So Maps obviously is important to me. So I guess those are the two. I'm just going to look at my phone quickly. The front page. Obviously I need a financial app, so I'm going to say StockTwits because it gives me what I need to check in, and I check it the most. Even though I use Twitter a lot, I definitely could live without it. I have it periods. And, I like a music app, but there's not one I could live without. And my phone. So really that's it. And my camera. So I think that's the problem in the industry right now. There's not an app for wives, hon. So that's it. It's kind of a shame, but that's where I think we're at in this stall is, what do you really, really need? It's kind of like the Swiss Army knife. There's really only a few things you need.
Right. It seems you have crowds of people around you all the time. How do you manage your celebrity status?
I pack. I carry heat. Taser? No, what do I carry? I don't shower. People just get sick of standing around me after 20 minutes. There's not crowds of people around me, actually. That's nice of you to say. You know me as social, but you know me also for being around me for years is that I like being alone too. I don't like being bothered. So I keep distance from it, but swarms of friends and things don't bother me. I'm socially, I would say, comfortable talking to 100 people at once. And that goes back to being a stand-up and failing. And I'm comfortable. It took years, but, I thrive in front of speaking in front of large groups. I feel I have a message. I feel it's positive. I feel it's doable. I feel people can follow me. And, what I've been working on, as you know, for a long time is just taking it more seriously and having a tighter message. So that's been more fun. But I do part of it is I'm supposed to have a crowd because we have a good message. So I enjoy it, actually.
Worse for the U.S., Trump or Goldman Sachs?
Well, I think it's Trump because he doesn't seem human. He has no empathy. Goldman has empathy. Well, Goldman's a corporation, so you can't get rid of him. Trump we can get rid of. He's just a person. Goldman's a much more complicated issue because individually there's great people. As a corporation, they just are there to make money and do with that for their shareholders or for themselves. And that's where the U.S. has its problem. This is the way we invest, the way we don't punish. We have enough laws and we're just not enforcing them. And it's a shame. It is Goldman's the bigger problem long term. And I think Trump will go away. The media says they want him to go away, but God forbid he does. They need him. And that's why I don't read as much. And people should stop. People need to stop freaking out. But at the same time, I don't know how he got this far. And I don't know how Goldman got stronger than ever, but we let them. It's our fault. And so longer term, we're going to have to deal more with the Goldman Sachs. Trump's 7 years old, so, whatever he has, it's not going to last forever.
On fintech, what is the next big trend, or is it played out?
Well, I think the next big trend is business model, right? Like subscription over assets under management, service over fees. It's just going to be business model. It's not going to be anything. Like I said, there's only a few apps you need. Everybody needs to take their money seriously. Everybody needs to learn the language of this. Everybody should be able to read a statement and figure out what they need without spending a lot of money on products. So I think it's just about business model and branding and trust. So there is no next big thing in finance other than, I think a lot of the companies are there and ready to do it that we've invested in and other companies have invested in. So I think most of the great stuff for this next generation has been funded. So it'll be much harder unless someone comes along with a great business model and a unique attack at customer acquisition. I think we're already there.
Do you have a hot stock tip for our listeners?
Yeah, I've been talking about PayPal and iRobot. They're not tips, they're just stocks that I own. Obviously, I still like Google as a conglomerate. I like Nike down 30% here. Like all the fashology companies, LULU and Under Armour and Nike as a basket down. They're out of favor. But as a tip, no. But I like Schwab as just a hedge on fintech because Schwab actually already has one. They have all the assets. So I've been long Schwab a long time. There's an ETF that I've owned for a while, GRID, G-R-I-D, which is electricity and water. So I keep it simple. I share that portfolio all the time. But there's no tip. I think the tip is that people can do this themselves and people can build their own portfolios and they don't have to buy the S&P 500. But they should buy the S&P 500 if the choice is just cash, and they should learn how to dollar cost average. That's the tip. Understanding, if we see red for 30 days in a row, that's not bad, that's good. As an investor, if you've seen green for 30 days in a row, that felt good, but that doesn't necessarily mean you shouldn't think the opposite. So it's just a kind of a red-green thing that I try and educate people on, is keep their emotions out of it and understand how the other people are thinking. Because you're investing against other people, not so much against yourself.
What do you collect and why?
Underwear. I have 800 pairs of underwear. Okay. What do I collect? I don't anymore. We've moved so much. We pare down. We like the utility over time of going smaller. The peak collection was like 06, 07. And where you had too many friends, you had too many deals, you had too many accounts, you had too much square footage, too much leverage, So obviously it's now social leverage, so it's all about your network and the right people in your network and the peloton. So, it's the opposite of 2006, 2007, which is why we started social leverage, which is a period of the opposite of financial leverage, where you got to pare down your things and start building your network to accelerate you, your next generation, your kids, to give them the means to survive in this next world.
One question I get all the time about social leverage is the name. And whenever I meet entrepreneurs also on behalf of social leverage, people ask whether social leverage invests in social startups or communities or things like that. How did you come up with the name, and what does it mean?
Well, just what I said before, the social leverage is about people and the network and the platform and the marketplace and the acceleration and the speed and the timing. You got to get all those things right. It starts with people. Everybody has a different thing. When we're wrong about the people. It's definitely our fault or the people that we invested in. It's not about anything else. It just didn't work, for whatever reason. And from there, it's the team, obviously people in the team, and then obviously it's can you deliver, a product that there's a significant market for. And so social leverage is just that whole interplay of I don't think you need endless supplies of capital and debt. I think what you need is people and teams that understand the problem with domain experience, that are willing to go fast and pin their ears back and use the peloton to go forward and strike and keep expanding.
And finally, when it's all said and done, what do you want to be remembered for?
Well, obviously, my family, are we net contributors? It's like a bank account. So do we, not about my footprint, just about the leverage that we leave behind, or to make sure everybody is, at least in our family and in our circle, is in a better spot than when we met them the first time.
Awesome. Well, that's all the questions I have. I just wanted to thank you so much for doing the podcast today. And it's been a pleasure working with you over the last almost 2 years. And really excited for what's next with yourself and StockTwits, social leverage, and everything that you do.
Okay, good. I hope you press play.
Shoot, I forgot record, actually.
I'd really like to thank Howard for his time today and just want to say that I really love working with that guy. Don't forget to follow at Howard Lindzon at StockTwits and Twitter. If you enjoyed today's show, please subscribe to the VentureForth podcast on iTunes, Google Play Music, Stitcher, or SoundCloud. You can also follow at VentureForth Pod on Twitter for our latest updates. As always, I'm your host, Joe Mahavutivani, and thank you for listening to the VentureForth podcast.